So with the Dynamark, we introduced our multi-asset risk controlled index, which is the Dynamo. That was specifically designed for Equitrust by Goldman Sachs. And the whole purpose behind it was to minimize the volatility that you find like in the S&P, for example. So it gives you the highest risk-adjusted returns that a client could get. This is, like I mentioned, a 10-year surrender with a 7% street-level comp. And the rider that goes with this product will be different. That's a strategic income option, and we'll talk about that here in a moment. But I am going to just touch on the rates and caps for the Dynamark because those are competitive as well. Now, with this, you kind of got the mix. You've got a couple strategies based off the S&P 500. That's the point-to-point capped at 5 and the monthly cap at 1.85. You got your fixed account at 2.65. And then you have those two strategies that are based off of the Dynamo index, which is the multi-asset index. 1-year point-to-point participation at 80% and a 2-year point-to-point participation at 100%. All right, so the strategic income option is available on the Dynamark product. And it is, again, guaranteed lifetime income. Roll-up is for up to 10 years or whenever they turn on the income if it's prior. And the roll-up on this product is a stacked design. So it's a fixed rate or a guaranteed roll-up rate of 4% plus any interest and index credits. So this is for that client who doesn't necessarily need the guaranteed roll-up at 6% like on the other products, but will be willing to take the little bit lower guarantee of 4% for the potential for a higher roll-up. Because if you earn, say, 5% on your accumulation value in a given year, your roll-up is going to be 4 plus a 5 or 9% roll-up. And then if you do have a year where you don't earn anything on the accumulation, then your roll-up would be 4%. So again, this might be for somebody who has a little bit more time to wait it out and see if they could get higher income based on that higher roll-up. But they are allowed to take it after the first contract year if they wanted to, as long as they are age 50. Now, there is a 10% bonus on the income side when you have the strategic income rider. So it'll be premium, then their 10% bonus, then the stacked roll-up of 4 plus the credited rate. Now, the charge for this rider is 95 basis points, but again, it's based off the accumulation value and deducted from the accumulation value. You can still add this to an inherited IRA or stretch IRA, however you want to refer to that. And then with this product, they also have the option for the chronic illness doubler. So if a client is diagnosed as being chronically ill, meaning they cannot perform 2 out of 6 ADLs, they can double on a single life payout their payments for up to 5 years. So if they qualify every year, they can double those payments for up to 5 years, and then the payments would drop down to the previously calculated amount. So that chronic illness doubler is not available on the other products that we discussed. So that is one reason why somebody might consider the Dynamark over the others. So one of the newer products that we just rolled out was the Accumulator Mark 7. So this is a shorter term indexed annuity at 7 years, featuring competitive rates and caps. With this product, they have a 107% guaranteed accumulation value rider. And this product is available through age 85. So that is different. So we haven't had any index products that were available past age 80 up until rolling out this product. So you have an older client who wants to get involved in the indexing, this would be the perfect fit for them. And this product does feature the multi-asset risk controlled index, the Dynamo, as well as the S&P 500. And we pay street level comp at 4.8 on clients 0 to 75, 3.6 on clients 76 to 80, and then those clients 81 to 85, it would be 2.4% street level comp. Listed here are the rates and caps. Fixed account at 2.5. You've got the two strategies based off of the S&P 500, point-to-point capped at 5, monthly cap at 1.6, and then you've got your two point-to-point pars on the Dynamo index. So this product you cannot add a rider to. The whole purpose of it is for accumulation. and accumulation in conjunction with a shorter-termed annuity. Now, the companion product is the Income Mark 7. So that's for the client who wants and likes the shorter term, so that 7-year term, but wants an income rider. So the income rider on this product is built in. And of course, we're guaranteeing lifetime income. They can't outlive. That's the whole point of that. And with this product, they can start income after the first contract year. They get a 7% benefit-based bonus, and then a 7% roll-up for up to 7 years. So when you compare this product to, say, the Market 12, kind of depending on when the client is looking to turn on income, this one can provide higher income. So, you know, if you do have a client who's looking to start income fairly soon, this would definitely be a contender. Now, the charge for the rider on this is 1 1/4, but again, it's calculated off of the accumulation value and not off the benefit base, which means that it's going to be a lesser charge than if it were off of the benefit base. And so if you are comparing this product to others, you would just want to make sure you're comparing, you know, apples to apples as far as whether the charge is off of the accumulation or off of the benefit base. This product also has the chronic illness doubler that I talked about on the Dynamark. So again, if that is of interest to a client, then they could take a look at this one. Now, this product is available for clients 40 to 80. And then the street level comp is broken down here. And then I'll share with you the rates and caps on this product. Well, there's not a slide for it, but I'll still share it with you. So the fixed account is 1.75%. The point-to-point cap on the S&P is at 3%. The monthly cap is at 1 1/4. And then we have the 2-year point-to-point par strategies on the Dynamo index. So that annual is at 55%. And then the 2-year point-to-point par is at 80%. I need to double check that as I'm sitting here saying that. I apologize. It's 65% for the point-to-point par. And then on the 2-year point-to-point par, it's 90%. I need to recap everything that I said. A point-to-point cap at 3.5%. And a monthly cap at 1 1/4, fixed account at 2%. Luckily, I have the all product summary attached so that you can be very clear on what the current rates and caps are on all of these products. Now, this slide here is just showing us our income withdrawal percentages, which are pretty substantial on the Income Mark 7. And obviously, if you're waiting to start your income withdrawals, then that's going to be higher income over the long term. And this is a chart here based on $100,000 in premium, what they could get after 1 year if they decided to turn it on, or if they waited 5, or if they waited 7 years once the roll-up is up. You can take a look at what would be available to them. All right, so another sales piece that we have available is the show book. So these come in the form of hard copy, PDF, or you can get the PowerPoint presentation. And it really just speaks generically about why, you know, the fixed income, or fixed annuity, or the indexed annuity, or the income for life, or the Dynamark might be a good fit for the client. And it really breaks it down very simply. So these might be something to check out. We usually send out, you know, one just to aid in the sale. It's not necessarily something you would leave with the client, because we do have, of course, the client brochures that you can leave with them. But this just helps them understand the concept and compares it to other financial products, why, you know, an index annuity might be better than that. We also have our index strategy descriptions, which can be really helpful in explaining to a client, or even a refresher for yourself, on how these different crediting methods work. So it's just one page, and we have it available on all the different strategies, explains, you know, how a client would earn credits, and then also shows the mathematical calculation of how that works. You can just even stick this into the client brochure, because like I said, it is client approved. Now, the examples on there are not based on current rates necessarily. So it's just to show you the math behind everything, because we want to be very transparent on how all of that is calculated and how your clients are going to earn. And with any of the sales materials, these are available for download on our agent website. So you'd want to go to the agent portal at agents.equitrust.com to snag those. All right, so that wraps up the indexed annuities. So we'll talk here briefly about the fixed products. Our Certainty Select is our MIGA, or our multi-year guarantee annuity. This is a single premium product with a minimum of $10,000 for qualified or non-qualified funds, and offers a 3, 5, 6, 8, or 10-year guarantee period for clients 0 to 90. They can get any one of those options. So the whole idea behind the multi-year guarantee annuity, of course, is that you have a fixed rate for whatever period you select, and then at the end of that guarantee period, so with ours, it's 30 days prior to, for example, the 5th year ending on a 5-year, 30 days prior to that 5th year ending, the client would have the option to renew, or they can choose to move it out without any surrender penalties. But the idea is it would continually go into a surrender charge period of 5 years if they choose to keep it here. So rates guaranteed for the first 5 years, and then we would provide the rate for the upcoming 5 years in a letter and give them plenty of time to look over that and see if they're happy with what we're offering as far as a renewal rate. With this, they get cumulative interest available to them, penalty-free. That can start as soon as 30 days after issue on a systematic basis if they wanted, or they could wait 3 years into it and take everything they had accumulated up to that point without being penalized. And then we pay full accumulation value at death. We do have the street level comp listed here. I'll let you take a look at that. And then I will share with you the current rates that we're offering on these different guarantee periods. 3 years currently at 2.25. Our 5 years at 2.6. 6-year at 2.75. 8-year at 2.85, and our 10 years at 3%. So, pretty simple product, and just gives them that fixed rate for a certain period of time. They don't have to worry about indexing or anything. They just know they're going to get what they signed up for. Now, the other fixed product that we offer is our traditional fixed product, and that's the Choice 4. And it also has gained popularity, and that's because of the features that are available to the client as well as the rates and caps that we're offering. So I'll go into that here. So the Choice 4 means that there's 4 different ways that the contract can be issued, depending on what the client is looking for in terms of features. So with this product, they can only add within the first contract year, and it's available for clients age 0 to 85, $10,000 minimum premium requirement. So I believe the next slide is going to tell us or give us a breakdown of the different options that the client has available. So I won't go into that quite yet. I'll just go over some more generic information. But with this product, we offer a first-year rate, and then the minimum after that is 2%. So, of course, the rate's going to change potentially from year to year, but a lot of times it would renew at what it was issued at, but the minimum would be 2%. And then we pay full accumulation value at death. Still have the nursing home waiver available for clients 80 or under at the time of issue. They're not forced to annuitize this. So yes, here's the breakdown of the 4 different ways the contract can be issued. The first is the base contract, and that's a 9-year surrender where they would only be able to get out the prior 12 months worth of interest. But what that's going to offer them is a higher first-year rate at 3%. And then, of course, minimum of 2 after that. The second option is our MVA option, which is also a 9-year surrender, interest only for withdrawal. And then by selecting the MVA, they get a 1.5% premium bonus. They still get that 3% first-year rate, minimum of 2 after that. The liquidity option is a 6-year surrender, which offers interest only year 1 and up to 10% available for withdrawal year 2, or starting year 2. And with this one, the first year rate is 2.75% with a minimum of 2 after that. And then our most popular version of this product is the Liquidity and MVA. This is a 6-year surrender, so they get also interest only year 1, up to 10% starting in year 2. They get a 1.5% premium bonus, and then a 2.75% first year rate with a minimum of 2 after that. All right, so the last product that we're going to talk about is the SPIA. We have one SPIA, it's called Confidence Income, and we actually just increased our payouts on that. So you'll want to maybe get an illustration to see what type of income a client could get from this product. So, the whole point of the SPIA is to put in that lump sum and then immediately get your stream of the client to get the stream of income. We offer anywhere between 5 and 20 years on a fixed period, a single life, joint life, or a combination of both with a life and fixed period. Our illustration software on our website is very easy to use, and you're able to run multiple options on one illustration. So you say you want to look at a life in 5 years or a life in 10 years on the same client, you have it right there side by side. So that's kind of nice. And then we pay 3% street level comp on this product, regardless of what option the client goes with. All right, hopefully you've been out to our website, agents.equitrust.com. This is where you're going to find App Builder. That helps you build your app packet. If you want to print that off and fill it out and mail it in, because right now you would either want to mail your apps or do an e-app. So on the website, you're also able to access our current rates as well as our renewal rates. So we are very transparent in that we show all of our renewal rates on the website. So if you wanted to go out and put in a hypothetical issue date, you can see how different strategies renewed year over year. And our renewal rate history is very strong. We talked about the historical growth charts. Those are available under sales tools, as well as those index strategy descriptions. We talked about that too. Once you get logged in, you're going to have access to the illustration software. And then a big thing now that we're offering is the e-app. So rather than mailing in an application, you can just do an electronic app, and that's under the e-app link on the website. Get logged in under individual writing number, and then access the e-app. You just fill everything in. You don't need a pad or anything for the client to sign. They would simply type in their name, and that's going to populate the signature across all the pages. So this just makes submission so much easier. And I think you're really going to like it if you just want to go out there and check that out. If you have any questions about that, just be sure and let us know in Sales and Marketing. And all your standard things available under Agent Center. You can view active and pending business, all the notes on those. Commission statements are available to you. You can pull your client statements. You can order supplies. And then we also have some advertising pieces that are pre-approved. So you can go out there, download those, customize them with your own contact information. Very simple. We've got mailers, flyers, print ads, whatever you might want to kind of generate some interest with prospective clients. So Equitrust was recognized as Award's Top 50 Life and Health Company 2 years in a row. So, if you have conversations about the ratings with a client, this might be a good thing to bring up because, they were looking at the safety and consistency and our performance, and being recognized for this was a pretty prestigious award. And so we have created some sales pieces around it. We have a one-pager that you might want to share with your clients. Here's the sales and marketing team. Hopefully you've spoken with some of us here. If not, give us a call. We can help you with product positioning, filling out the forms, any questions you have about what product might be a good fit for your client. There are 5 of us who are on the phone on a regular basis. That's Brian Davis, Carol Christie, Mackenzie Swenson, Matt Stiles, and myself, Lori. Also here you see our national account managers. They are wholesalers that could just travel the United States and work with marketing organizations, bringing sales concepts and product information. And then our Assistant VP of Sales is Heather Kane, and our Assistant VP of Communications is Bob Baer. So that's the team is going to be working with you to help you with your sales. So this is just a quick recap of the competitive advantages of the Equitrust products, kind of where we stand out against the competition. We offer the strong rates. We have a true bonus, so no vesting schedule on our bonuses. Competitive growth potential. You've got the Dynamo strategy, you've got S&P, but we do keep things simple. We have a strong renewal rate history, which we even have a sales piece created around that because we think that it's something the client, should be concerned with. What are going to be the renewals? What are the renewals? What do they have looked like in the past? Some flexibility with accessing money. So the return of premium rider is that peace of mind guarantee, basically. And then our income for life riders, they kind of vary depending on what the client might be looking for. And then we try to simplify all our sales materials, make things easy for the client to understand, and also makes it easier to sell. This is the direct line for sales and marketing. That's where you'd want to call. You're going to have less hold times. You're going to get most of the time right through to us to answer any questions that you have. We want to make the sales process as smooth as possible for you. You can also email us if you'd like at sales.support@equitrust.com. We monitor that regularly, so you'll get a quick response that way as well. And I said I wasn't going to keep anybody too long here. I don't see any hands raised with any questions yet, but feel free still to raise your hand if something has come up that you've been thinking about as I've been talking. And if you want to give us a call on the sales desk to ask any questions or get an illustration or sales materials, anything that you need pre-sales support, we are happy to help. But that's going to wrap up the presentation for today. Hopefully you're able to identify maybe some products that would be a good fit for your clients. If you haven't downloaded the all product summary, I would really encourage you to do that. Like I said, it's just a quick reference. You can kind of see everything right there at your fingertips. One thing I didn't mention that I will just briefly bring up now is that we have a mobile app that you can also download, Equitrust Agent app. And that is just going to make it really easy when you're on the go to check, the status of a pending app, or you'll get your alerts when commission is paid, things like that. So you can just really keep on top of things with that Agent app. So if you need any help with downloading that to your phone, let us know. But I think that's going to wrap things up for today. I hope everyone has a great weekend and that you will join us on future webinars. Have a great day.